Welcome to the Morning Market Show. I'm your host, Paul LeJoy. The Morning Market Show is for your education, enrichment, and empowerment. Our show is to educate, enrich, and empower our audience. So welcome. Today, I'm going to be sharing with you the real estate market. Is it crashing? How bad is it going to get? And how can you benefit from it? Is this real estate market crashing? How bad is it going to get? And what are you going to benefit from it? So stay tuned. (2020 to 2029). I remember someone asking me to share a presentation to talk about something, whatever I wanted to talk about. That was at the end of 2019. And I said 2020 to 2029 will be the best decade of your life. The best decade of your life. I proclaimed that. I was telling people that 2020 to 2029 will be the best decade of your lives. Can you imagine that? But what happened? We entered 2020, and at the very beginning, I think it was February, the second month of the year, Kobe Bryant died. Kobe Bryant, this guy, basketball player, was one of the most famous. He was pretty young when he and his daughter and other people died in a helicopter crash. I was shocked. I did not know this guy very well, but I knew that he was one of the best basketball players. So I actually flew down to LA, to mourn his passing. I flew down to Los Angeles with the rest of the people from all over the world. I met people from Greece, from Louisiana, and other places as they gathered at the stadium, the Staples Stadium in Los Angeles, to celebrate the life of this young man. 2020 started with a shock. Then just a month later, what happened? A month later, what happened? The pandemic hit. The pandemic hit. And guess what? Everybody was shocked even more. The entire world. It's never happened like this before. Everyone was shocked. Were you not shocked? Hotels shut down. Airlines shut down. People were laid off. Ghost towns, malls. You couldn't go to the mall, couldn't go to restaurants. Terrible, terrible experience. And it happened for a whole year. And things change. Things change. And then, of course, because of the pandemic, people not being able to go places. What happened was that people were working out of their homes. Inflation went up. Actually, before inflation, what happened was that unemployment went up way high, right? Unemployment went way high. And of course, it came back down. But demand also went terribly high as people were no longer going to work. People no longer going to work, but people were working out of their homes. So people left those crowded cities and going to the suburbs, right? And looking for bigger homes where they could actually set up offices at home. That is what happened. And because of that trend, guess what happened? Oh, the demand went so high, supply was low, and of course we had inflation. So much so that in 2021, it was one of the most expensive years I've ever had. And 2022, the beginning of 2022, we had the worst inflation in 30 years. The worst inflation in 30 years. Worst inflation in 30 years. And that's why the government decided, hey, what is a better animal? Is it inflation or is it a recession? Is it inflation or is it a recession? And so we had record low interest rates like you never had before for many years. And because prices went up really high. So what happened? The government had to tame the wilder beast, which is inflation. Inflation. So you started seeing an increase in interest rates. So the beginning of May, interest rates were less than 3%, they jumped to more than 5%. In some parts, they were actually about 6%, as seen in mortgage interest rates. Wow. So 2020 to 2029 is coming with a ton of surprises, a ton of surprises. Like I said, Kobe Bryant died. With him came what? Came the COVID-19 that killed so many people. Americans were loaded in trucks, truckloads of bodies. Terrible. Something like never seen before. And then inflation, like you never seen before. So what's 2020 to 2029? How does that look to you? We're going to talk about that today. We're going to talk about that today. And stay tuned, right? We're going to take a quick break. And when we come back, we're going to talk about that.
Interest rates have come up and home values are coming down in most places. Now is a great time to buy. The days of bidding wars seem to be behind us. Don't have money? Don't worry. You can now buy a home in California with little or no money down. There are over 3,000 of these programs across the country and over 350 in California alone. Get up to 10% of the purchase price for your down payment and pay nothing back if your income is 80% of the area's median income. But even if your income is above 80% of the area's median income, you can still get down payment assistance. Get 5% of 3.5% assistance. And beside the down payment assistance, you can also get seller credit, realtor credit, and even lender credit to pay for your closing costs. To find out how you can qualify for this great assistance, call us now at 415-510-0127 or visit us online at themoneymarket.us.
Welcome back. Yes, visit the Money Market. They are our sponsor, the sponsor of the show, and a great company, right? Basically, they're Amazon for mortgage solutions. They talk about buying a property with little or no money down. But we're going to talk about inflation in this next segment. Inflation explosion, the highest level for decades. So we're going to talk about that. I'm sure you're feeling the pinch. Right? So inflation. Let's talk about gas prices. We saw that. I mean, unless you live on the bridge or you live in a cave, then you've seen that values have gone up. I'm talking about gas prices have gone up, especially compounded by the invasion of Ukraine by Russia. I don't know what side of the wall you are on, but that's a stupid thing that this guy is doing, right? Putin thinking that he's going to revive the Russian Empire. There was never a Russian Empire. So go sleep, man. Okay, we don't talk about it. I want to get too political. But because of his invasion, stupid invasion of a neighboring country, Ukraine, guess what's happened? Gas prices that were already going up, they're going up quite a bit from 2020, gone up quite a bit, double in price, and we saw in some places, like I'm going to show you in California, $7, $8 per gallon. $7, $8 per gallon. That is not good stuff, right? So Chevron, like I said, you go to Chevron or you go to any of these gas stations, Shell. Oh my goodness. I remember one time, for the first time, I was shocked. I drive a GLC 300. So that is an SUV, a Mercedes SUV. So I drive that car and typically, and I have to use a premium gas, typically it will cost me about maybe $60 something. And that's for a week, right? $60 something. Okay. But then I was shocked one time when this thing hit. I pumped gas for the first time. The tank was empty. And guess how much it cost me? It cost me $114. $114. I don't really drive around, right? I don't drive too much because my office is very close to where I live, right? My office is very close to my home. So I just go from my office to my home. And sometimes I drive to other parts of the Bay Area, but really I don't drive a lot. But can you imagine that? $114 a week. That is not sustainable. Is it sustainable to you? So we saw an increase in gas prices such as we've never experienced again in our lifetime. So, like I said, the year 2020 started with terrible news, the loss of Kobe Bryant, and then the pandemic like we've never had before, like you've never seen before. And then gas prices in 2022, okay, just went wild, crazy, wild beast. Whoa, that's not good. Was followed by what? Food prices. Food prices. I love oxtail. I love oxtail. Do you love oxtail? I love oxtail. And I used to buy it at Ranch 99. And Ranch 99, the Chinese supermarket. And then, of course, I went to Costco. I thought I may have a bargain at Costco. But guess what? I was shocked. Oxtail that I used to buy for about $12, then it went up to $18. I was shocked. That was $32, the same size. Terrible stuff. Another one is basically, hey, I love what they call unagi, right? And it's eel over rice. And I was shocked. I used every time I go to a Japanese restaurant, I'll order the same food, unagi. I was shocked the other day when unagi that I used to buy for $18, actually $14. And when I asked him how much, no, not ask him, I just basically gave me a bill and was $28. On top of that, they asking for what? For a tip. Have you been to a restaurant and right there they give you three versions of tips, right? And it's like 15%, 20%, and 25%, for goodness sakes. Not only have I paid this thing, I paid $28 for a little thing. The portion is even less now. But guess what? I still have to give him a tip, even though I'm not even dining in. Crazy. This is not sustainable. No wonder people are leaving California. I don't know what it is in other states, right? Next week, we're going to talk about that. How people are leaving California in droves. And for the first time, our beautiful state of California has experienced what? Negative migration. We're going to talk about that next week. But today we're talking about inflation. We're talking about the real estate market crashing and how you can benefit from it. I hope you are learning something, but I'm getting to somewhere, okay? So stay tuned with me, all right? Next thing, we're going to talk about food prices. I already talked about that. So what have you seen in your marketplace, right? We've seen food prices go up and up and up, you know, and what has gone up? Cereals and soybeans. Okay, cereals and soybeans, you know, these things have gone up quite a bit. You know, I mean, what else has gone up? Milk has gone up. A lot of stuff has gone up. Wow, fish has gone up, like I said. Oxtail has gone up. Everything that we know has gone up. Okay, cool. Now let's talk about home prices, which is something I really want to hone in today. Mike was talking about home prices have gone up, and what are we doing about it? How can you benefit? Inflation has taken us by storm, but how can you benefit from it? I remember the average price in the city of Newark, where I live, okay? The average price here in the city of Newark was only about $352,000 when the market bottomed in 2012. It doesn't matter where you looked. It doesn't matter what city you visited. I looked at the statistics and it bottomed in February 2012. Okay, 2012. The market reached its bottom in 2012, right? And the average price, like I said, for a single family residence in Newark was about only $352,000. Do you know what the average price of the same property was at the beginning of 2022? Just 10 years after that. 10 years. So we're talking about inflation such as we have never seen before, right? Talk about food prices, gas prices. This is unsustainable. But how about housing, which is the number one thing, right? Shelter. You may go without food, you may go without gas, but shelter is the number one priority. You need to live somewhere, right? I know some people are homeless and they live in the bushes, but what kind of life is that? Shelter is the number one. And then shelter is the most expensive thing in California. Shelter, housing. So guess what? The average price in Newark was just 10 years later, February 2022. It was $1.5 million. The same house that you could buy 10 years ago in 2012 was now many times, 5 times more expensive than only 10 years ago. Is that sustainable? And that's the same thing for the entire California. We'll look at the data, okay? If you look at the data from 2012 or 2013, you see that it doesn't matter where you are in California, values went up quite a bit. Some places 3 times, some places 2 times. But where I'm very familiar with, they went up 3 times, 4 times, 5 times even. Is that sustainable? What do you think? Are you still going to continue living in California, or are you planning to move? Right, we're going to talk about that. Today, remember, we'll talk about is the housing market crashing, and how can you benefit from it? How can you benefit from it, right? It is going down, but we're going to talk about that. But we're going to take a break, all right?
Are you self-employed and thought you could not afford to buy a home or would have to buy one all with cash? Who told you so? Contact Paul LeJoy and his staff at the Money Market Inc. and you can buy a home with only your 1099 or your bank statements. That's it. Paul and his team have helped get people like you into homes this way. No tax returns, W-2s, or pay stubs required. Just your 1099 or bank statements. And now that the real estate market has softened, there's no greater time to get a bargain. You can use your 1099, bank statements, or profit and loss statements and buy a home with only 10% down. Don't have 10% down? Don't worry. You can use gift funds as well. What's more, you can get seller credit, realtor credit, and even lender credit to pay for your closing costs. Call or visit the Money Market Inc. today. They are the Amazon for mortgage solutions. Call them at 844-806-6639 or go online to themoneymarket.us.
Okay, welcome back. Right. All right, I said basically the real estate market, is it crashing? Is it crashing? And how can you benefit from it? So what is the government doing? What is the Biden government doing? And is it working? What is the Biden government doing and is it working? Right? So we're talking about inflation and how it is affecting the United States, right? So you see, which is a better animal? Is it inflation or a recession? You've noticed, if you've been around, not only have you noticed that prices are going up, like I mentioned, but the government is taking action. The government is a free economy, okay? It's a capitalistic economy, America is. But guess what? The government can step in and rain down on whatever they feel it's not good, right? Is it better for you to go to the supermarket and don't know what prices are going to be tomorrow? Or is it better for you to know that, listen, man, prices can be controlled? Yes, I think it's better for me to know and for you to know that, listen, man, if I'm buying milk and I go there tomorrow, the price is not different from what it was yesterday or last week, right? predictability. So the government has taken action. And what have they done? They've increased interest rates such as you never seen before. We've seen a rise in interest rate, a spike in interest rates, and you will continue to see some of that, right? As the time goes on. Is it a good thing? Sure, it's a good thing. I'm sure it is a good thing. And we're starting to see the effect of that. So what's happening? You're seeing a swing. If the government takes action, there has to be a reaction. For every action, there's an equal and opposite reaction. And we're seeing that now, right? For sure. All right. So let's see what's happening. Okay. So what's happening right now? You see that is it because of the government's action? What are we seeing right now? We see that there's a change, there's a shift in the market, in real estate, right? So let's talk about buyer's market versus a seller's market. A buyer's market versus a seller's market, right? In a buyer's market, the demand is lower, the inventory is higher, longer listing time on the market, fewer offers, and price reductions, right? So what are we seeing right now? Okay, demand is lower because the interest rates have gone up. It's just economics, right? When supply is high and the demand is low, what happens to the prices? They go down. But what we've seen the last 10 years is that the demand was way high, the supply way low, therefore the prices went up. Just economics. So because what was low? The interest rates were low, and what else was low? The supply was low. And so what effect did that have? Okay, it had effect on the demand. It had effect on the price. So the demand was high, the price was high. Now that is a seller's market where the demand is high, where the inventory is low, and you have shorter listing time, and of course, multiple offers on properties, and the sellers, okay, are getting prices way above the list price. Okay, that was what happened that we saw with our own eyes in the last how many years, right? But now we're seeing a shift because the government has to rein in, try to tame this beast called inflation. So we are seeing now, maybe demand is still high, right? But inventory is a little bit higher. And okay, properties are taking a little longer on the market, and they're getting fewer offers. And okay, see price reductions. Every time I open my email, what did I see? Price reduction, right? Or price improvements. That's a better way to say that they're reducing the price. And they're staying longer on the market. So what does that mean? For sure, there's a shift in the market. There is a shift in the market, and it's turning to be a buyer's market. All right, cool. So let's talk about some examples that I have for you. Okay. All right. San Jose, for example, let's talk about some markets in the area, on the West Coast. I don't know about the East Coast, but I'm sure that no matter where you listen to me, you can look and see that changes. I was talking to an associate of mine who lives in Maryland, and they're seeing the same thing, right? It's the same country. They're seeing that the market slowed down, across the country. If you speak to any mastermind group, you speak to any association that you're with, you see that basically values have changed. Things have changed, right? So let's see. San Jose, for example, heart of Silicon Valley, saw the largest drop in prices, as much as 10% in recent months because of the government's action. I would say because of inflation, right? Because of the increase in interest rates. San Jose dropped by 10%. It's followed by Seattle. Seattle dropped by 7.7%. And San Francisco, most beautiful city in the world, as I say. I don't know about that. It dropped by 7.4%. San Diego, 5.6%. Los Angeles, 4.3%. And Denver, 4.2%. So what have you noticed in your market, whether it's a big market or it's a small market? I'm sure that you have noticed a drop in prices, right? Right? So what are you doing about it? A drop in prices offers what? A good opportunity for buyers who've been sitting on the sidelines, buyers who've been priced out. Yes? All right. So good. So if you're a buyer, listen to me. This is good news. Remember, I was talking about is the real estate market crashing? What is government doing about it? And what are you going to benefit from? Okay, what are you, the listener? Okay, do you know any friends, relatives who've been looking to buy real estate for some time? But guess what? They could not buy because of the high prices, because of the bidding wars, because of the low inventory. Now is a time for them to celebrate. Go shout it over the mountains, over the hills and everywhere. Time for buyers to buy. And what can they benefit from this? And if you're a real estate agent, listen to me now. How can you pivot? You should pivot, right? That means you should target buyers. And you can actually target sellers too, but we're going to talk about that. But let's talk about buyers, first of all. If you're a buyer, you can now buy a home with little or no money down. Okay, we're going to talk about that. But what are the things? Remember, today I'm talking about is the real estate market crashing. How far is it going to get? How far is it going to get? And how can you benefit from it? Some people think, okay, Paul, is the market going to crash? As everywhere you see right now in Oakland, I see values going down, right? San Jose, I mentioned, is 10% drop. Okay, people think it's going to drop like 2008. No, I don't think so. Because, I mean, it's stupid for anybody to do that. 2008 was a different dynamic than what we have today. 2008 was a different dynamic. There's a lot of fraud in 2008. People had multiple properties, multiple homes in 2006, 7, 8. There was money was available, and people were not approved right. People just, if you could breathe, if you had good credit, you could buy a property, right? Okay, nobody checked your anything. They didn't check your income. They didn't check anything. Nobody checked anything. Guess what? When you breathe, if you breathed and you lived in America, you did not even have to be an American. You could be an illegal person and you could get a home. Really, if you just got an IT number and your loan officers were fraudulent, banks were fraudulent, everybody was fraudulent. Everybody was. I'm talking about title companies. Okay, I'm talking about realtors. I'm talking about buyers, sellers. Everybody in America was fraudulent in 2006, 2007. 2008, that is why the market crashed, right? I remember people coming from Florida and they'll be boasting about how many properties they have, right? And they come here trying to sell you stuff, pipe dreams, and they'll take your credit card and they'll tell you should be part of their mastermind, right? Part of your mastermind group, and you buy homes in places like Ocala, Florida, you buy homes over there that you haven't even seen, homes that you haven't seen, and they take your credit card. That was crazy back then. So don't expect to see that kind of crash. Don't expect to see that kind of crash, because I know for sure that people that bought because of the things that the government, Obama government put in place, right? You heard about Dodd-Frank and all that stuff. Okay, you heard about the trade and all that kind of stuff. So guess what? Because of those measures, people were fully qualified, right? You could not buy a property without them looking at what they call the debt-to-income ratio. They have to look at, even if you bought a property, no money down, they have to look at your debt-to-income ratio, right? So if you made $10,000, they did not want your housing expense to exceed $4,500. You made $10,000 a month, they did not want your housing expense to exceed 45%, which is $4,500 a month, right? So that was good. But back in 2008, 2006, 2007, nobody cared. People would sell your houses. They'll say that's your primary residence. It wasn't your primary residence. They will sell you houses at the same time, 2 houses simultaneously, right? As if those 2 houses are going to be your primary residences. They were not going to be your primary residences. It was really terrible back then. So don't expect the same result. Don't expect the market to go down. Well, it was bound to go down a little bit. Okay, it was bound to go down because we've had this right for 10 years and it's cyclical. The real estate market is cyclical, just like any other market. It's cyclical, but it was bound to crash. It was bound to go down. It was bound to correct. That kind of rise, meteoric rise, was not sustainable. Remember, like I said, gas prices going at $7 per gallon, right? Not sustainable. Okay, food prices going up, like I said, oxtail going at $32, right? The same thing. Oh, onagi going for $28. I'm not going to go to a restaurant anymore because every time you go to that restaurant, guess what's going to happen? You gotta pay that $28 that you thought would be $14. That's double, right? And then you gotta pay that stupid tip. No, not sustainable. So housing was not sustainable either. You can imagine places like Palo Alto, a small house going for $4 million. $4 million for a small 3 bedrooms, 2-bath home. I mean, you got to leave this place. If all America like that, okay, then go to another country. Or if California's like that, move to Alabama, move to some other place, move to, okay, you don't want to go that far. Okay, move to Omaha, okay, or move to, what is it? Idaho. It's not too far from here, right? But this was not sustainable. But now we see a correction, right? A correction. But it's good news for those people who want to remain in California. This is good news for you because now you can get seller credit, you can get lender credit, you can get realtor credit, seller credit. Okay, some lenders allow you to get up to 6% seller credit. Okay, and then you can get lender credit. What does that mean? That means if you have a little bit of a higher interest rate, then you can get a rebate. You can get a rebate. And that's good news for you, right? And then you can also have realtor credit. I want to talk about that a little bit. Can you imagine? Let's say the average house here, like I said, in Newark was $1.5 million, and the realtor is going to charge you 5%. 5%? Come on. Why charge 5%? Why not charge 3%? Why not charge 3%? 3% of $1.5 million is quite a bit. 3% of $1 million is $30,000. And that realtor could split that commission with a buyer's agent. Both of them would get what? $15,000. It's a very high paying profession, right? $15,000. For how much work did they do? How much work did they do? How much work did they do? So guess what? They could split that. Now, let's say they charge 5% and they're getting 2.5%. Why didn't they give the buyer 1% of that? Why can't they give the buyer 1% of that? They can be able to give the buyer 1% of that and take home the rest. That's good. So you, the buyer, you can request for realtor credit, okay? And you can request for seller credit, and you can request for lender credit. So even if the interest rates are high, guess what? You can get the credit from the seller up to 6% or at least 3%, and you can buy down the interest rate. So forget about the interest rates being so high. You can benefit. Remember, we're talking about, is the real estate market crashing? Okay, how far is it going to get? And how will you be able to benefit from it? Okay, and remember, my goal here on this show is to do what? To educate you, to enrich you, and to empower you. Educate, enrich, and empower. And I hope that the information I'm sharing with you today is valuable. So especially if you're a buyer who has been priced out for these many years, this is a time for you to buy a property right now, okay, with little or no money down. Little or no money down. This is a great time to buy, right? This is, you can get seller credit, you can get lender credit, you can get realtor credit. Okay, now let's see. Another thing that you can benefit from the new trend in the market is down payment assistance. Down payment assistance. Wow. So that's another one, right? So not only can you get seller credit, lender credit, and realtor credit, you can also get down payment assistance. There are about 3,000 of these in the United States. 3,000 down payment assistance programs in the United States. 350 of those in California alone. 350 of those in California alone. So you can avail yourself to this, right? Down payment assistance programs. So what does that mean? There are three types of down payment assistance programs. One is at 3.5%. 3.5%. 3.5%. So the first mortgage is going to be at 96.5%. 96.5%. The second mortgage is going to be at 3.5%. So now if you get seller credit, the seller can pay for what? The seller can pay for your closing costs. Okay, that is one. The other one is 5%. 5%. And there's no income limitation. The other one is 5%. That means you get you can do a 95% on the first mortgage, and the second mortgage can be 5%. Or you could do a 96.5% on the first mortgage, 96.5% on the first mortgage, and 3.5% on the second mortgage, and then you get 1.5% credit, seller credit. These two, not seller credit, I'm talking about lender credit here, okay? These two programs, right, do not have any income limitation. They have no income limitation. Then there's a third one. The third one is 10% down payment assistance. This comes from Cal Harper. Okay, this is the California Association. Okay, that's basically California Housing Authority that will give you up to 10% down payment assistance. Some of these ones, that with 10% down payment assistance, that means they're financing up to 105% of a purchase. And these down payment assistance programs, whether they're 3.5% or they are 5% or 10%, some of them, depending, are not payable. That means they're forgivable. You can be forgiven. You don't need to pay back the down payment assistance that you got. Wow, that's amazing, right? Remember, today I'm talking about is a market crashing, right? Is a real estate market crashing? How far is it going to get? And what can you benefit from it? Whether you are a buyer or an investor, even as an investor, you can buy a property with very little down. I'm going to talk about that some other time, right? You can buy a property and ask for the seller to credit you some money so that it can pay for your closing costs, right? So down payment assistance, okay, with a 10% down payment assistance, there's income limitation. That means basically you will have to make 80% or less of the area's median income. 80% or less of the area's median income. I don't know what the area median income in your area is. If you're listening to me, I don't know, but where I am in the Bay Area, an expensive Bay Area, the area's median income, for example, for my county is $151,000. $151,000. And 80% of that is about $120,000. So if you make about $120,000, guess what happens? $120,000, you qualify for the 10% down payment assistance, and you don't have to pay that money back. All right. If you live in the house for 5 years, live in the house for 5 years, and that loan is forgiven. Right. Remember, I'm talking about how can you take advantage of the market, the real estate market, the way it is today. Right. So let's see. Besides that, remember I talked about there are about 3,000 of these down payment assistance programs in the United States, and 350 of those are in California alone. They're in the state of California alone. This is just amazing stuff. This is how you can take advantage of what's going on, especially a first-time home buyer. Okay, let me talk about some examples of homes that some people are taking advantage of. For example, I'm in escrow on a property in Union City, California. The average price of a single-family residence in Union City now at the beginning of this year, 2022, was $1.5 million. Humongous. The numbers are not sustainable. Average price, 3 bedrooms, 2 baths. Okay, in Union City, single-family residence was $1.5 million. I am in escrow right now on the same property or a similar property for less than $1 million. I helped a buyer. This buyer been looking to buy for such a long time and he could not buy. But we're now in escrow. Guess how much? For $870,000. $870,000. Granted, this property needs a little bit of work, not too much, not even $30,000. We're in escrow for what? For $870,000. And guess what's happening? The seller is giving the buyer 3% in closing costs. And the buyer is buying this property with literally no money out of his pocket. Absolutely no money out of his pocket. Remember, I'm talking about is the real estate market going down and how can you benefit from it? Is the real estate market going down? How far is it going to go? And how will you benefit from it? I am now giving you some strong examples of how some people are benefiting from it. From a property in Union City, this guy is buying it. Now, who could not afford to buy a property for a very long time? He's able now to buy a property in Union City, right? For less than what? For less than $1 million. For less than $1 million. That's just amazing stuff. Okay? For less than $1 million, he's buying his property and he is paid absolutely nothing, pulling nothing down. And the seller is buying, it's giving him up to 3% credit. And he can get lender credit. It can get broker credit, right? Realtor credit. If he asks for it, he can get it, of course, because 2.5% of $870,000 is what? It's almost, okay, 2.5%. So 2% is about, okay, 16,000. So it's like about $20,000. So can he get 1% of that? Yeah, of course. How long did he take the realtor to show this property to this guy? You know, they just went out and showed the property. And after he showed the property and they made an offer, how long did it take the realtor to make an offer on this property? Not too long. Maybe just the TC, the transaction coordinator, should make an offer on this property. Guess what? That is great stuff, right? Okay. So the realtor spent not much time and he's making almost $20,000 on this transaction. What if he could give 1% to the buyer? Okay. Now there's another property in San Jose. All right. Another property in San Jose that was listed for 1.56 million, actually. Was listed for $1.6 million. And this is pending at 1.470. 1.470. That is a whopping $130,000 decrease in the original price. See, that is another buyer who had been priced out before that now is benefiting a lot from what's happening. Now, can this buyer also ask for seller credit? Of course, can just increase into their purchase price a little bit and ask for the seller to give him back the difference. This did not happen before, but it's happening right now. Remember, we're talking about, is the real estate market crashing? How can you benefit from it? How far is it going to get and how will you benefit from it? All right. So let's talk about that and let's conclude, right? But before that, let's have a little bit of a break here.
The refinance boom is over, but that doesn't mean the mortgage industry is dead. As a matter of fact, we see a new trend swinging in. The pendulum has shifted to buyers, and we expect to see more buyers coming out of the woodworks. These are people who were often outbid and lost out in the bidding wars of the last 10 years. These are people with little or no money down. Now that the market has shifted in their favor, we expect to see a purchase boom down the road. Serve this population segment and make money in the process. Join our team and carve out a system that guarantees you leads and helps you close transactions month after month. But we offer more than transactions. We offer an ecosystem where money works for you and not vice versa, meaning that you don't make money only based on your own and sole efforts. With us, you can make residual income as well. Call us at 415-510-0127 or visit us online at themoneymarket.us.
Okay, welcome back. So today we talk about interest rates going up and stuff like that. And we talk about how can you benefit from it. So if you're a seller, all right, if you've seen on the sideline for a long time, the sellers have been really greedy, right? Trying to make a lot of money. Okay, so I've had just the past week sellers coming to me, Paul, do you think I've missed the boat? Do you think I've missed the boat? Should I sell now? Okay, you know what? You should sell now, because for a long time you actually own that property. You did not work for it. You just own that property, and the market, you sat in that property, pay your little mortgage. Imagine if you bought a property in Newark when the market was down, right, 10 years ago, and you bought it for $352,000, and now the same property is $1.5 million, but now it's dropped a little bit to $1.3 million, even dropped to $1 million. How much money have you made from $352,000 to $1 million? Okay, that's a lot of money. We're talking about close to $700,000, and you're going to be moaning about that. Oh my goodness. Okay, are you going to beat up your husband or your wife for not selling on time? No, now is a time to sell. Okay, you made the money, take it along with it, especially if you want to leave California, or you want to go to another part of California, another part of town, and you want to take advantage of what you've made on that property. Yeah, I would say that do that. Do that. Don't wait. Don't wait, because it's going to go down a little bit more. Who knows how far? I don't have a clue. I don't have the crystal ball. I wish I did. Okay, but I know for sure it's going down. So are you listening? Okay, is the real estate market going down? Mr. Seller, Mrs. Seller, is it going down, and how can you benefit from it? So I would talk about how buyers are benefiting from it. Okay, how buyers are benefiting from it. This is a time for you to benefit too. It's not too late. It's time for you to sell. You can sell now and benefit. Take the money that you have. Or if you don't want to sell, what you can do is basically you can pull out a home equity line of credit. Pull out a home equity line of credit, right? Take out the money and go buy a property somewhere else, right? For us, honestly, we can fund you even if you don't sell this property. You don't need to sell the departing property first to buy a property somewhere else. You don't need to, because we can pull the equity from your property, okay, your existing property, to go and buy somewhere. Some lady called me the other day. She wanted to buy on the East Coast, right? Yeah, sure. She can buy on the East Coast. She has the property here in this area, in the Bay Area, is worth $2 million. So she should take it, and basically get $700,000 from this property, go buy a property on East Coast, cash, right? So today we talked about, is this real estate market crashing, and how can you benefit from it? I hope you had a good time. I did have a good time. So thank you so much for listening. This is Paul LeJoy. Hey, you can find me online. Go to themoneymarket.us, themoneymarket.us, or call me at 415-510-0127, 415-510-0127. It was a pleasure having you on the show today. I look forward to being with you again next week. Until then, this is Paul LeJoy, 415-510-0127, or go to themoneymarket.us. Thank you so much.